your money in the bank safe? That is the fear nagging depositors across the country. So much is the uproar over the new banking FRDI or Financial Resolution Deposit Insurance Bill that the government had to step up and speak out. In fact, Finance Minister Arun Jaitley said that as much as 2.11 lakh crore is being pumped in to strengthen the banking system, so the question of a bank failing doesn't really arise.
बिल्कुल गलत ही हो रहा है हमारा पैसा हमको विदाउट हमारी परमिशन कैसे निकाल सकती है बैंक में से गवर्नमेंट ये तो गलत ही हो रहा है सब नाइंसाफी हो रही है गरीबों के साथ में
बैंक इन्वेस्टमेंट कर रहे हैं बिना पूछे तो ये तो गलत बात है
At the heart of people's fears, the bail-in clause, which suggests that your money saved in bank deposits could be used to keep afloat a failing bank or financial institution. But as Finance Minister Arun Jaitley took pains to point out, the government will fully protect public deposits in banks.
आज भी 2,21,000 करोड़ रुपया डाला जा रहा है और सहायता की जा रही है बैंक्स को मजबूत करने के लिए जो सरकारी क्षेत्र के हैं.
Even as the debate over FRDI bill, currently under scrutiny of a joint parliamentary committee, rages on, Mirror now asks, what is the bail-in clause? If used, how will it impact our bank deposits? Can banks access money in your account without your consent? And most importantly, is your money in the bank safe? Mirror Now report.
Good evening, viewers. You're watching the Urban Debate on Mirror Now. I'm Faye D'Souza. Thank you for joining us. We've received so many phone calls and messages and tweets about the FRDI or the Financial Resolution Deposit Insurance Bill, where people are suddenly very worried about their money, that we've decided to put together a strong panel of experts who can explain to us what's really going on. Fundamentally, this is what it is. There is a bill that will be before Parliament during the winter session that will change the way banks will deal with the situation of bankruptcy. Remember, of course, we've had almost no situation of bankruptcy of banks in India because the RBI normally steps in, makes sure the bank merges with another bank, therefore nobody actually loses their money. And this has been the case up until now. So why are we worried at this point? The only point of contention is a bail-in clause, which basically states that instead of the government coming in and pouring money into a bank to help it tide over a bankruptcy, what will happen instead is the money that's already deposited with the bank by depositors will be used to tide that period over. It doesn't say the bank will take away your money. It will continue to be your money, just in a different form, perhaps not a savings bank account or perhaps a fixed deposit of a longer tenure. We want to understand if this should be worrying, if we should be worried, or is this normal procedure for banks across the world that have in the G20 that happened in 2014 all adopted this new bail-in to prevent a 2008 sort of meltdown from happening again. So the question is very simple. There's only one question. Should we be worried? Or is this actually just routine? That's the question we're asking this evening. Joining me on the show, I'm very proud to have Mr. K.C. Chakrabarti, former Deputy Governor of the Reserve Bank of India, who's taken time out to join us. Tamal Bandyopadhyay is a very senior business journalist who's been tracking the banking sector for several decades. Kailash Vasudev, senior advocate with the Supreme Court. Thomas Franco, General Secretary of the All India Bank Officers Confederation, Secretary General of the All India Public Sector and Government Officers Confederation. Mr. B.R. Muralidharan is a chartered accountant and a financial consultant. He's also the author of that particular WhatsApp blast that almost everybody's read, which basically was titled, "This tsunami will wipe out your savings lying in banks." So if there is a lot of panic, this is where it started from. So we're going to understand, what his thought process was when he was writing that particular article. Mr. Shailesh Gandhi, former Central Information Commissioner, bringing in the citizens' voice here, representing us as citizens. Gentlemen, thank you so much for your time. I'm going to do a round of opening arguments to understand how each of you feel about this particular, bill. I'm going to start with Mr. Chakrabarti. Mr. Chakrabarti, thank you for making time to explain this to our audience today. The bail-in clause. Do you believe we should be worried about it? Is there reason for us to be worried about it as ordinary savings bank account holders?
You see, no, as an ordinary saving bank account holder, you need not be worried. You see, one thing we must understand that up to a particular amount deposit is already insured, and bail-in clause is not applicable to insured deposits.
Yes.
And to my mind, I don't know exact figure is not available, about 90% depositor, they keep the money less than 1 lakh in the bank. And today, this particular amount cannot be used into the bail-in. So that's the first point. Second point is that this is not going to happen ordinarily. This is only when the financial crisis comes. Now you have two options. Either taxpayers' money utilized to bail out the bank, or those who have financed the bank. And I must say that depositors are also financing the bank, and bigger depositors who are financing the bank, who should share the burden. Globally, it has been decided that this burden to be shared not by the taxpayers, by the others. Now, if we have accepted that position globally in the G20 meet, I don't think we should bother much. I don't think it is going to affect very much unless and otherwise a large financial crisis comes. And I don't see any possibility, at least in the near future.
Mr. Kailash Vasudev, do you agree? That, and I just want to point out, and we've been reading through the bill, and this is what it looks like. It's quite a hefty, very difficult to understand document. But it says basically that insured amount will not be touched. The insured amount as it stands right now is 1 lakh rupees per deposit. So this would effectively mean that up to 1 lakh rupees, the money will not be used for this particular bail-in clause. Above 1 lakh rupees, perhaps it will. Kailash Vasudev, do you agree with Mr. Chakrabarti?
Look, Mr. Chakravarti's perspectives are based on global banking. We have to understand the Indian ethos and systems. In global systems world over, the citizens receive benefits after a certain age by way of retirement benefits. Today, the average man in India, after paying his taxes, gets nothing from the government. So he looks upon his savings in the bank as his only control, which will take care of him in times of need. Up to 1 lakh, he is protected. Beyond 1 lakh, he is not. Take, for example, a situation today where you have to go to a hospital, or you need an emergency, or you want to buy a property, or you want to make an investment. Your sum over 1 lakh, as and when the bail-in takes place, is not available to you. This is one aspect of it which I understand from the bill as it is now standing, because it is meant as a bill for the purposes of bailing out financial institutions. I have another question here. Mr. Chakrabarti is here. You have other members of the panels who have been governors of the Reserve Bank. In the past, all banks have been bailed out under the Banking Regulation Act. It has worked very well since the nationalization of the bank in 69-70. No bank has gone into bankruptcy over here, nor has any person had the pinch. The difficulty has arisen because the bad loans which are given and not recovered. You give thousands of crores have been taken by one company, by another group of company and the likes. You've permitted them, you have added to the fuel by giving them more loans for the purpose of recouping their financial positions. Can't we do something to regulate the loan systems to those who are defaulters rather than putting everybody at stake? By that I mean, you have got the chance of recovering dues from defaulters. You have the Debt Recovery Act, you have the Securitization Act, you have all sorts of acts and provisions available to you. Why must you have a new act when the old systems have worked well to protect us, save and except where there have been deliberate default by banks or suggestions by government to bail out an industry or bail out the larger borrowers? Here is where the question is, why a new act? And for what? When you have provisions in existing rules, Banking Regulation, Reserve Bank of India Act, directions of the Government of India, powers under the Consolidation Fund, Consolidated Fund of India, why do you need this now? That is my question to all of you, because I am not able to understand that.
Right. Let me bring in, Tamal Bandyopadhyay here. Tamal, do you, and we do understand, of course, that during the G20 that took place, in 2014, there was a commitment by all the countries who were present there, India included, to meet the same norms, and that was including a bail-in provision so that in case there is another financial crisis, the whole system doesn't get taken down. Explain to us where you stand here as a journalist on this bill and all this bail-in clause. Do you believe we have reason to be worried?
Well, the line is not very clear, so I have understood. If I'm not very sure whether I have understood you correctly. But I think the important point at this point of time is to communicate to the masses, and there is a risk of miscommunication. So here are the facts. As of now, our deposits are protected by DICGC up to 1 lakh. Yes. Now again, let me make it very clear, this is up to 1 lakh per person. So suppose I am a depositor and I have 3 deposits in one particular bank, or 4 deposits, a couple of fixed deposits, 1 savings bank account and one say recurring deposits and so on. So my total or rather the bank's total commitment to me after it fails would be 1 lakh, including of principal and interest. So it's not that because I have 4 deposits I will get 4 lakhs. Not. It's a 1 lakh per person inclusive of interest. That's point number 1. And that is there. Beyond that, there is nothing. There's a void at this point of time. Has any bank failed in India? I'm talking about the government-owned bank or even the private banks. If you leave aside the cooperative banks out, no. Because our banking regulators' primary aim and objective has all along been to protect the depositors' interests. It's very critical in Reserve Bank of India's scheme of things. The last time a private bank came on the verge of a collapse is Global Trust Bank sometime 15 years ago, and Reserve Bank of India, if I may say so, brokered a deal overnight, and another bank which is owned by the government, yes, Oriental Bank of Commerce, took over yes, this particular bank. So depositors has lost no money. Depositors have been losing money in sporadic cases in in cooperative banks. Yes. So Indian banking system, India is one of the countries where we don't have the history of bank failures. So what does the new acts, the new legislation talk about this? Your deposit insurance up to 1 lakh will continue to remain. Beyond that, what is the future of my money, which is not clear at this point of time. Now this bail-in clause kicks in, and being an unsecured creditor, certain what is my entitlement, so on and so forth. So I think it's very theoretical, very academic at this point of time, because historically, as I said, no bank has been allowed to fail. Our banking regulator is extremely sensitive as far as protecting the depositors are concerned. So we are continuing with 1 lakh protection, which will not. In fact, there is one advantage. At this point of time, what happens is this: typically, a bank, if there's something wrong with the bank, and I am talking about what happens in the case of cooperative banks and so. First, Reserve Bank of India says that no, the bank is not entitled to take new deposits, and then Reserve Bank of India says that it puts a cap, the existing depositors, how much money one can withdraw, and then the resolution process can run for months and years, and till the resolution process is complete, no one gets the money. Yes. I remember there have been at least a dozen cooperative banks in
So Tamal, your argument is that with the bail-in clause, we're actually better off than we were.
Not cancel their licenses, and people were just holding, the banks were holding their money, and people are not allowed to get their money, even 1 lakh. Right, and one lady, I think, went to the High Court, Lucknow UP High Court, and got some money.
Right. So Tamal's argument, all right, Tamal, let me bring in my other panelists. Tamal's argument is that the bail-in clause actually puts us in a better position than we were before this was brought in. Mr. Shailesh Gandhi, do you agree?
You will get it within a time-bound manner. So
I do not think the bail-in position puts us in a better position. But I think briefly let me recount. The conventional thinking of any average middle-class person or any service person or even the poor is that if they want to take higher risks, they'll go into the equity market. Otherwise, they'll put their money in their
fixed
bank
deposit, yes,
and feel rest assured. Especially senior citizens.
But Tamal has just told us that we have no reason to be rest assured right now.
There is no, there is no reason to feel, because the truth is very sad, and I think the finance minister knows this. That is why he is bringing this bill in. He does not want to take the burden on the budget of the nation, And therefore, he's bringing this bill in. Today, we have over 10 lakh NPAs. Then we've got another 4 to 5 lakh so-called NPAs sitting in CDR and another amount. So the total amount is horrendous. Instead of cleaning up and becoming transparent, the Reserve Bank of India is actually flouting Supreme Court judgment of December 1915,
yes,
2015, which asked it to be transparent. Reserve Bank is refusing to do that. So there is a very big worry that maybe something is going wrong desperately, which is being hidden from us. We are not being told what is happening. And this bail-in clause makes we all are financing the bank. We are not financing the bank.
Let's ask KC Chakrabarti if that is true. Is it true, Mr. Chakrabarti, that this is that there's something to worry about in terms of the general health of our banking sector, or like Tamal said, we actually have no reason to be rest assured right now. So this is actually an improvement from our current situation.
You see, even the present level of NPA worrisome is bad, but even then depositor need not worry. If you say that, say maximum 20 trillion rupees is the NPA of the banks, but out of that there will be at least 12 to 13 trillion is already provided for. Then remaining is, again there will be some security, some recovery will come. Then over and above these banks have their own capital. The first capital will be adjusted. So I don't think that even with this level of NPA, the depositors need not worry. When we say that yes, 20 trillion is a big amount of NPA, absolutely no doubt. But then banks have internal resources more than that to take care of this NPA. So they are still solvent. And so depositors have no reason to lose the money. Yes, if the NPA becomes 60%, 80%, then that's the issue is different. But as you know that bank's credit deposit ratio is only 70%. And out of that, I don't think the NPAs are going to be beyond 25%, even worst case scenario. And within that parameter, under the present framework, banks are solvent and depositors need not worry.
Well, in that case, Mr. Chakrabarti, why do we need the bail-in clause? Can't we do without it?
That's right.
You see, it is for a financial crisis. It is 1, 2 bank failing, you will be able to take care. Now, suppose there are a financial crisis, there are 10 banks, 20 banks, they are failing, and a very, very big bank fails. Now, the idea is that who should, look, in any case, public is going to suffer. If we bail out through the taxpayers' money, you know that because of financial crisis, we are today also in the difficulty. So there has to be a procedure that how are we going to resolve the bank, and for that there has to be a framework. That does not mean every time if some bank is in the trouble, the government will not come to the rescue or Reserve Bank will not come to play its role, merge with another bank, these things will not happen. But if there is a financial crisis where a large number of banks are failing, as Tamal said, otherwise also existing depositors are going to lose the money. Now this is a much more scientific framework, what we call legalized framework. How are we going to resolve the issue?
All right, let me bring in Thomas.
And it is more important if there are global banks. If the bank, for example, a Citibank fails, now how are we going to resolve the Citibank across the various territories?
Well, you know, my only, as a citizen, my only argument to it would have been your taxpayer money anyway is, we part with the tax that we have to pay. We pay the 20-30% income tax and it's gone, and it's up to the government to use it any which way the government thinks fit. But the money that's in the savings account is money that you're saving for a reason. So I want to go to Thomas Franco of the All India Bank Officers Confederation, who I understand appeared before the Joint Parliamentary Committee on the 6th of December. Thomas Franco, is there a need here perhaps to increase the insurance from the current 1 lakh rupees to more than that? Because what if I have 2 lakh rupees, 3 lakh rupees in a fixed deposit with a bank? Am I only going to get 1 lakh rupees in case of a financial crisis? And I want to keep reminding our viewers that this is the last resort on a very, very bad situation. So the odds of this happening are close to zero. Thomas Franco, go ahead.
Yes. First of all, there is need to increase the deposit insurance. Initially, it was started with 5,000. Now we have reached up to 1 lakh. There is a need to increase that. But this resolution bill is not the correct solution. Number one, Indian banking system is different from the Western banking system. The Financial Stability Board, which was constituted by the G7 and adopted by the G20, was based on the 2008 financial crisis of US. US economy is not a savings-based economy, but in our country, 61.5% of the depositors are small depositors. 17% of the depositors are NRI depositors. 13% belongs to the government deposit. Only the rest, a small amount, is corporate deposit. So here the larger number of depositors are contributing to the deposits of the bank. So far, there has been no failure of any public sector or private sector bank. One or two small cooperative banks have failed where the DICG has come to help and to save them. Now, once this bill is passed, DICG is not going to exist. Then where is the question of this 1 lakh even? They have not mentioned any amount. What resolution corporation will allow to pay? And I quote you an example. 2013, immediately after a similar bill was passed in Cyprus, 2 banks in Cyprus collapsed and the depositors got back only 47.5% of the deposit they had given. And if that happens to our country, what happens to this large number of small depositors who have deposited? Already we are getting every day hundreds of queries from depositors.
But Mr. Franco, forgive me for interrupting you, but while there is a bail-in clause mentioned in this bill, it also clearly mentions an insurance for depositors from banks, that the corporation will provide an insurance for depositors. So let me take this question back to Mr. Chakrabarti, and now, I'll open it up to my panelists. So let me know if you want to jump in at some point and clarify some point. Mr. Chakrabarti, is there a case here to increase the depositors' insurance past the existing 1 lakh rupees to maybe 5 lakhs or more than that in order to give people security for their savings?
I want to come in here.
Yeah, you see, look, if you can increase, but the basic thing is that in any system, you can give insurance to how many people? I have already said, it is, you see, look, we are looking at our country. When you are saying our country, 90% people's deposit is already protected. If it can be made 2 lakhs, this should be made. But there are many other things which need to be done along with this bill. For example, many countries, basically it is retail depositors who are going to suffer. Now they are bifurcating that retail bank and wholesale bank. Now the problem of NPA, big NPA, you all know, because of big corporate NPA only banks fail. Because of small NPS, banks never fail. So they say that you will regulate, you will supervise, you will create what we call a ring fence the retail banks. You can bring that type of regulation. All what I am saying, that I don't think the objective of the bill is that small depositors, retail depositors, they should going to lose money. But then if the bank fails, a large number of bank fails, there is no other way, somebody has to sacrifice.
Yes.
And it is a legal framework how that resolution is to be made. But that does not mean that deposit insurance should not be increased, or we should not bring better regulation and supervision, or we bifurcate the role between the retail bank and wholesale bank and regulate them in 2 different frameworks, which is done in many other countries. And most importantly, we must make the financial sector regulators accountable, the bank managements accountable for their failure. So these are the things which need to be done so that bank failure never happens. That is the basic purpose of this bill. And I think unnecessarily we are a little bit more worried. Yes, we must be worried. We must raise our voice. We must try to understand. But I think I am trying to give you the proper perspective what is happening.
Yes, yes.
If financial crisis comes, we should all be worried. And the purpose of the bill is that the financial crisis should not come, because you have to take some other measures also along with bringing the bill. For example, the corporates should be funded from the market, not from the banks. I think Reserve Bank started that process, all of a sudden again withdrawn. We need to do many other things along with that to really protect the retail depositors, for which all my panelist members are asking, they are rightly asking the questions. They need to be done. So, yes, along with insurance amount being increased, many other things need to be done along with the bill. then only I think many of the doubts which have been raised,
which is not
they
I have a
can be
question
answered
for
properly.
Mr. Chakravarti, where someone has written in on involve.in saying, why should I pay for or be punished for bad decisions made by a bank or bank management? So I think on some level the average citizen is asking, if this whole bad loans, which has now gone up to 10 lakh crore rupees, it's an enormous amount of money. If there is, what steps are being taken to correct this problem? What steps are being taken to penalize those who made the bad decisions to get us to this point? Mr. Chakravarti, do you believe that we're doing enough to clean up the system?
I don't think we are doing enough. We need to do more, absolutely not. But basic thing is that if you have given somebody money, then if he does not pay you back the money, you must suffer. Now, if we are saying this particular principle should not be applicable, I don't think we'll be able to function in a system. Now, if the depositors have given the money to the banks, now while giving the money, then you should be also cautious. What is the rating of the bank? You should not give the deposit to the banks who gives very high interest rate because they are more risky banks. Now you see that those things have to automatically come. But you cannot say if I have given money to somebody and if he fails, then I need not suffer. This does not happen in the real life.
Right. That's a fair point. And I'm going to reiterate to our audience that we're talking about a point when you have a financial meltdown, when your banks are failing, when sweet hell is breaking loose effectively, and this is the last resort. So actually, without the bail-in clause, what you're looking at is a possibility. So currently, if that were to happen under the current rules, your bank would just go bust and you would lose your money. Other than 1 lakh rupees, you would lose everything else. What this would do is make sure that the bank doesn't go bust, and in return, instead of losing everything above 1 lakh rupees, your money would get converted to something else. So nobody's saying the money will be taken away from you completely. It gets converted into another form of asset. Mr. Muralidharan, Mr. B.R.M. Muralidharan, chartered accountant who wrote that WhatsApp message that went viral. So for the benefit of the government who's wondering where all of this started, here he is in the flesh on the show. Are you convinced now? Have you changed your mind after you've heard Mr. Chakravarti's arguments?
Not one bit.
Why not?
I would like to share a few points. We are discussing too much about the micro aspects of the bail-in. I'm going to share a few basic aspects which have no much relevance to economics, finance, or banking.
Okay.
What is banking? Banking is a basic infrastructure that is supposed to be provided by the government to the citizens of the country. Like they give us hospitals, like they give us an office of registrar to file our legal cases, whatever we want to, stamp duty, registration, etc. These are the basic services given by most governments across the world. The bail-in brings in a new concept.
Okay.
They are trying to redefine the relation between a depositor and a bank.
Okay.
The first question that comes to my mind is, when you bring in bail-in, will there be an accompanying bill which will be profit in?
So you're saying if the bank makes a profit, do I get a cut of that profit? No, you don't.
Can it be heads I win, tails you lose?
That goes to the government.
Second point, a large part of the people, I'm talking about the middle class, lower middle class labor, they come to a bank because they have no facility to keep that money in their house. It could get burgled. A worker, he earns 15,000-20,000 rupees. Every week he withdraws some 3,000 rupees.
So, but to be fair, post demonetization, none of us can keep money in the house anymore. We've been encouraged to keep all of our money in the banks.
That you would know when you go into the actual ground realities. Yes. What I am saying is, when you talk about a bailout, bailout comes from the budget allocation.
Yes.
It involves the money received by the government, direct taxes, indirect taxes.
Yes.
I'll give you a small example. Let's say the amount to be given to a bank to save it is 1 lakh. Let us say
bank.
No, I'm just giving an example so that the figures are easily understandable.
Yes.
Let us say the number of taxpayers amount to 80,000. So every person, when he pays 1 rupee 25 paisa, and the bank is saved. Take an individual bank and go to the only the depositors and suppliers. Bail-in talks of two people, depositors and suppliers. who give maybe the furnitures, the safe deposit vault, vault room, etc.
Okay, and your point is, I'm going to have to ask you to hurry because I want to go.
No, it's okay. There the number of people come down. So if you are talking of, let's say, 50 people having to raise 1 lakh, each has got to give 2,000 rupees. Okay. And the point on the insurance, which has been repeated again and again, it was announced in 1993, raising the figure from 30,000 rupees to 1 lakh.
Yes.
That 1 lakh today is 20,000 rupees.
Yes.
What is the insurance we are talking about? We
so you're saying that has, it's not, okay. Let me bring in Tamal Bandyopadhyay. If his audio is fixed and he can hear us now. Tamal, what's your response to Mr. Muralidharan, who wrote that WhatsApp article that went viral? What's your response to his argument right now?
No, yeah, I understand. That has gone viral. So I personally feel we are giving too much of importance to this. Also, I'm a little reacting to your previous questions to Dr. Chakravarti. Should you raise the money? You know, during the 2008-9 post-Lehman crisis, I think there are rounds of discussion between Reserve Bank of India and government. Should we raise the money? 1 lakh is, it was fixed many years ago. So and that inflation adjusted, you see the money is much less now. Why shouldn't we raise? I think one reason why it was not raised, because the government thought that it would create panic, because government thought that if people would suddenly overnight might feel that their money is at risk. Otherwise, why is Reserve Bank of India raising the insurance cover? That was one reason. The other reason is this: even for 1 lakh, if I am correct, 93% of the depositors are being covered. So this 1 lakh covers 93% depositors. You can imagine. So we can discuss whether 1 lakh is becoming 20,000 or 30,000 after inflation adjustment, etc. That's a separate story. But the fact is, 1 lakh covers 93% of Indian bank depositors in Indian banks in the banking system. And in percentage term, this is the 30% of the market it covers in terms of thing. So this beyond 1 lakh, there are only 10% of people, and I would imagine they are savvy about financial matters. So that's this is not the only way. They are into different asset classes, banking, not only the banking thing and all. So as I'm said, you are actually bringing in a law where there was no law as such. Okay. There was no life beyond 1 lakh as we talk. Now we are creating a roadmap that, look, your 1 lakh remains, whatever today, if it goes to 2 lakh or 3 lakh, that's a separate story altogether. The money which has been protected, which is subject to insurance covers, remains. It has not been taken away. Now beyond that, when there was no certainty, at least there is a roadmap that how you can get your money back, what are your rights, and etc., etc. So what is wrong about it? I think it's a perfectly legitimate way of doing things, but I think the challenge is to communicate to people. Yes. In a country where we do not have a social security system, where a large savers community, they depend on their pensions and others' money keeping in the banks, and they earn on their savings and interest and all. So we need to communicate that well. That's point number one. Point number two, as I said, already this bill is taken care of two important aspects. One is this, within a time-bound manner, getting your money to the extent has been covered, and second is also oversight on the banking activities, because depositors they can end up losing their money for no fault of their own. It's the bank's bad credit decisions. Now, how the banks are taking credit decisions, now there will be vigilance and supervision on that. So what else do you want?
Right.
I think
so Kailash Vasudev wants to respond. Kailash Vasudev, please go ahead. Rebuttal from Kailash Vasudev.
See, the position is this. We all know of the fact that international banking is very different from banking in our countries. In India, banking was nationalized in 1969 for the purposes of protecting the depositors and their monies. Today, we are opening up all sectors. In 1955-56, we nationalized the life insurance because of the same fear that the money would run away. We created the Life Insurance Corporation. After you created the nationalized banks and you created the nationalized insurance, life insurance in 56, general insurance in the 1970s. What happened to the profits of these companies? They all go to the government of India because they're government-owned companies. These are regulated by the Insurance Acts. They are regulated by the Banking Regulation Act. In the foreign countries, this doesn't happen. They may have a bail-in, may have a bail-in system, they have any system which works. It works to their convenience to protect the banks because they deal largely with corporate sectors. In our country, the banks are basically dealing with the average man on the street who invests them into what are called debt funds. Debt funds are the only thing they look forward to as a guarantee or a security because the interest element will keep them going if the principal is not dissipated. Here under the Act, just see the object of the Act, I'll read it out to you. It says an Act to establish a framework to carry out the resolution of certain categories, please mark certain categories of financial service providers in distress, to provide deposit insurance to consumers of certain categories of financial services, and for designation of a systematically important financial institution. Now you look at it, it is for the purpose of financial service providers in distress. So we are looking at the Act only for the purposes of working out a distress system, not looking at a system where we could change the system and avoid the distress.
That's right.
Distress is bound to come in finances. Distress is bound to come because we make wrong decisions for wrong purposes. Is there no method in which we can get rid of the distress by taking recourse to available systems where bad loans are not given? Where persons do not go into distress and pay money for those who are in distress. Why should we? I take away your money. There's the story of Peter pays the like. Why should we have this system? I pray ask you all. You have a debt system in which we survive.
Okay, okay. Thomas Franco, yeah, right. We understand. Thomas Franco wants to come in.
Is the survival for 90% of our people.
Thomas Franco, go ahead.
Yes, two things I want to clarify. One, for this non-performing assets, the Parliamentary Standing Committee on Finance submitted a report in February 2016 on efforts to be taken. That effort has not been taken even today. Not even a single effort has been taken on the recommendation. And these defaulters are a very small number of people who have got a great number of credits, large credits. Just to take care of 700 to 800 borrowers who are the major defaulters, you are going to shift the blame or the trouble to depositors who are more than 100 crores. Second thing is, first time they are bringing in some class called the liquidation class. So far, the public in this country have a faith that our banks are government banks, they are having a sovereign guarantee, they will not be liquidated. But this bill is bringing in clause to liquidate State Bank of India, liquidate public sector banks, liquidate cooperative banks, liquidate RRBs, LIC, GIC. Why should we talk about liquidation at all? Is it possible to liquidate any of the banks, any major bank in this country? You will not be able to. Instead of that, what this resolution corporation will try to do is to hand over these banks to the private sector who are looking for taking over these banks. So they have been the defaulters. Many of them have been availing large credits, and they are the ones who are looking for taking over of this bank. And this liquidation clause is only aimed at that. That is my problem.
All right. I want to take this back to Mr. Chakravarti. Mr. Chakravarti, what is your response to these arguments? And for someone who just wrote in saying that, should I then leave my savings in the bank? Should I spread it over different banks? Should I keep only 1 lakh per bank and open multiple bank accounts? It sounds like a nightmarish question, but it does seem like people are worried, Mr. Chakravarti.
No, answer is very simple. 1 lakh is involving all banks. Now, even if you keep 1 lakh each in each bank, now what is the deposit protection is only 1 lakh. So it is very simple. So by splitting the deposit, you are not going to get benefit unless the insurance law, the insurance clause itself is undergone a change. For example, in UK, each bank you are protected up to a minimum amount. Suppose that is the thing. That's so. In India, what is the position? I say, look, I am not supporting, I am not saying that it should be increased or not. It all depends, because for that also banks have to pay on that and whatever amount bank pay, it comes from the depositor only or the borrower only. Now, two things I will say. One, somebody said that government has created the banks. No, government has never created the banks. Even banks in our country has been created in a non-government sector.
Yes.
That is first one. Second thing, people say that this is not our bank, this is our banking, it is not international banking. Our banking is 100-year-old Scottish banking. This banking system is nothing. It is what the Scottish bankers practiced before 100 years. Other banks have gone reform, their process have reformed, we have not properly reformed to that extent. But to say that this banking is our banking, I think we are ignoring some basic facts. Now, we will be not able to avoid, suffice to say that I agree with everybody, the simple this law is not going to solve the problem. We need to make the bank depositors, you see, more safer, and also give them confidence. I think we need to, I'm saying, for example, recovery NPA, doing good loaning. Now, even if we don't want that the retail depositors' money should be utilized for providing loan to corporates, many countries are creating, they are all bifurcating the role between the retail bank and wholesale bank. Yes. That can also be done. That retail banks, we are now what we call ring fencing, so that wholesale borrowers.
So, Mr. Chakraborty, you're saying it's possible to avoid this bail-in clause.
But
you're saying it's possible to avoid this bail-in clause from this particular bill?
The bail-in clause still will remain. If a crisis comes, you see, look, banking is a risk-taking business. Bail-in clause will remain, but then because the bail-in laws will be applicable to all the banks together, but then generally, for example, state-owned banks, still at least finance minister, if I take in the face value, he said he will support the banks. Now, if we capitalize the banks, then the question of bail-in clause does not arise. Now, whether state-owned banks will be really, the bail-in clause will be necessary or not, I don't know. But then so far as legal framework is concerned, even today beyond 1 lakh, you have nothing in the law. So to that extent, it is only giving you a procedure how it is to be done. That does not mean government will not come and rescue its state-owned banks. It is government is never saying that.
For 70 years, for 70 years we did without a bail-in clause.
If it does not happen, people will lose.
And the reason why Reserve Bank is being opaque about its dealing, not even listening to the Supreme Court judgment, is because there seems to be something suspicious. And the high-value depositors will go away from the banking system and spread their money in equity, gold, and assets, property. They will go away, and as the other panelists said, these banks will be handed over as a gift to the private sector. This is what I think is actually happening, and this is very dangerous. And if this is not going to happen, what is the need to bring in the bail-in clause at this stage? The bail-in clause is being brought in to accommodate this. The whole principle now is, if you are a borrower of 1 crore, I will go after you. If you are a borrower of over 1,000 crores and you don't pay, we'll understand your business problems and then support you. And maybe the depositors will have to pay for that. This is ridiculous. What needs to be done is to bring down, even today there is no clarity, no transparency in what is the effort being made to recover money from the NPAs. There is nothing clear about this.
Okay, so I want to bring this one point to Mr. Muralidharan, and this is an argument that that I have heard, that it is a small part of a very comprehensive bill. It's 100 and nearly 20 pages. It is a very small part of a comprehensive bill to sort of regulate crisis in the financial sector. Are you blowing it out of proportion?
I'm asking you a simple question, you answered that.
Okay.
This whole effort is towards controlling, containing the NPAs. I see a report saying that just 12 entities, 12, owe 1.8 lakh crores, which is nearly 23% of the overall NPAs in the country. What efforts have the government done to recover that money? And incidentally, these 12 entities name, there are the names of some of the big players.
No, but that could happen simultaneously with
this.
It's not happening. It's not happening. Your point is that it's not happening.
We have been talking about bail-in incessantly now for the last 15 days. I would like to, first of all, the point I want to know is when they are redefining the relation between customers, bring in profit in. Second point, before this bill comes through, 10 steps that will be taken against people who have taken the money from the bank and not repaying it.
Yes.
Number 2, steps that will be taken against the bankers, the CMDs, the board of directors. Today, the whole emphasis on growth in advances, 23% growth, 18% growth, left to where? Why do we need that? Today, do we need growth or do we need consolidation? Get your bank's books proper, go behind the people whom you have got. That is the way you are going to and imagine one thing. If you are talking of 10% NPAs, no bank ever makes that kind of profit. They live on 2%, 3% spread. Then what happens to the profitability of the banks? We never discuss about that, is it? We never will discuss about
several banks are listed and they have to announce their profitability to the stock market on a quarterly basis.
This has happened over 20 years, not overnight. But there is a systemic problem. You go, if you still need to, unfortunately, go with that. Cyprus had its own share of problems. March 25th, 2013. I just want to tell Franco, 47.5% was written off. Another up to 90%. They froze the account.
Yes.
In terms of the fact that you can't withdraw these things. Right. And they are painful, man.
So let me just ask this one question of Mr. Chakrabarti. Mr. Chakrabarti, I'm coming back to you. Is this to allay the fears of the people who are watching right now, and Mr. Gandhi and Mr. Muralidharan, is this regulation or this bill being brought in because of the NPAs, or was this already in the works? Is this in reaction to the current, perhaps, ill health of the assets of our banks?
No, you see, look,
it must be.
I have always stated, even with this level of NPA,
it is coming in
today
because of
depositors' money is not under threat. I have explained that. Even if you consider there is 2 trillion rupees of NPA or 2.5 trillion rupees of NPA, banks are solvent, depositors' money is not under stake. But then, yes, NPA position is definitely of concern. We need to address these issues.
Chakrabarti, is why do you want this bill?
There is absolutely no doubt in that. But to say that because of this NPA, this bill has come, I will not say, because banks are otherwise solvent. This bill has come out of the financial crisis, a G20 recommendation, where every country has agreed that they will bring a resolution framework. And this is more, again I am repeating, it is more for those banks which work in a multi-country environment, because the resolution of those banks are really difficult. When Lehman Brothers failed, the resolution become extremely difficult because they are across various countries. So that's why this law was to come. It is coming. I think I can only say we are unnecessarily exaggerating. Why? Along with this bill, so many other things, improvement needs to come, but immediately depositors need not bother. I think their money is well protected in the banks.
Right, their money is well protected in the bank.
We have too much of reference about this G20, which came in 2011. India is apart.
2014.
No, 2011. I'm very sure about it. The point is, India as a member accepted that point. Nobody is enforcing India to use that. It is totally in the hands of India to use that. The main point of this is, I tell you, the consequences. The moment you have got a certain fear, rightfully or wrongfully, about the monetary system, about the banking system, that is not right for the nation. You will have people withdrawing their money and keeping under the beds.
But see, the whole point of this conversation is to put those fears to rest. The whole point of this conversation and this particular issue is to put those fears to rest. Mr. Chakrabarti has agreed to give us his time for that very purpose, to be able to put those fears to rest and assure people that there's no reason to take your money out of the bank.
RBI put up the facts in the open. They are not doing that. They are defying the Supreme Court's judgment on this.
I'll ask you one question.
Grading of banks. What is the position? What's the true position? Has all been hidden. NPAs, some are called CDR, some are called SDR. This is obfuscation of the
nobody can understand. Okay, so one second. Tamal, very, very quickly. And Mr. Chakrabarti said rightly that you become officially a stakeholder then in your bank, which means that you have to choose your bank very carefully. I will put my money in this bank because this is a good bank, as opposed to one that has bad NPAs. How do we even tell the difference between the two? We don't have access to that information right now, Tamal.
No, again, I agree with Dr. Chakrabarti. I think we are giving little exaggerated importance to the entire thing, or rather we are exaggerating the significance of this. And I think we are bringing in all sorts of issues, everything about banking system, the bad loans, the problems, so on and so forth. But, this is not the way to approach the thing. This is a pretty clear, in that sense, yes, you need to be careful where you are keeping in money. because it's ultimately it's a market and you are a market player, so you need to decide, and the market will throw out the inefficient players. So you need to, wherever you are putting in money, you need to think where do you put your money. But let me repeat once again, I think all are academic exercises. India is one of those rare countries which does not have any history of bank failure.
Okay.
I have been hearing your panelists talking about bank nationalizations and all the history of.
Right.
Now may I ask all of you, how many banks have been allowed to fail in this country?
Okay. I'm going to wrap up this discussion because we've run out of time. But in conclusion, what our experts are telling us today, and we're going to continue to have more conversations about this because we've not answered all the questions. But our experts are telling us that this is a last resort in a completely bad situation, and it is a resort that will work in the favor of depositors. So basically, as it stands right now, you're only insured up to 1 lakh rupees across all your bank accounts, across all your deposits. So if the bank were to fail, you would lose everything after that 1 lakh rupees. This would mean that you'd have that 1 lakh rupees, plus there is a plan for what happens to the rest of it, as opposed to where we are right now. That's the explanation that we have at this point. And as this goes to the winter session, we'll continue to have more conversations to answer more questions about the FRDI. We're going to have to wrap up this conversation, but get in touch with us if you have concerns about this bill, and we'll try and answer as many questions as we can. That's a wrap on the Urban Debate right now.